Well, after all the excitement we saw in the previous session, we've seen calmer heads prevail, and the idea that we can see Donald Trump impeached anytime soon obviously is a bit of a fallacy if it happens at all. I mean, certainly people are saying that the hurdles are very, very high, and in fact probably most people would agree that the big moves that we've been seeing are probably more a reflection that all the controversies that we've seen from Donald Trump and the political system there are more a reflection that tax reform is being pushed back and priced fully out of the market. And perhaps we're going to see a bit more of a dysfunctional Washington going forward, and the idea that it may even impinge on economics at a time when economics is fairly shaky and going through what the Fed call a transitory patch. And perhaps could even impact earnings. So that's really where we are, but certainly calmer heads have prevailed. Look at the dollar. The US dollar has seen some buying. It's stabilised at least, and dollar yen stabilised today through Asia above that 111 handle. If you look at the implied probability of a rate hike in June, well, it's clear that we've got confirmation once again that the moves in the S&P and the Nasdaq are driving those implied probabilities. So the fact that we saw the Nasdaq up 80 basis points and the S&P up about 0.4% has seen that implied probability of a June hike increase to about 71%. It was well below that, around 60 odd percent, but in the prior session when we saw financial conditions really come under pressure. So I think you've really got to take a view on the S&P. If that falls out of bed from here, then clearly we're going to see the implied probability of a rate hike in June falling a bit lower than where it is at the moment. Euro dollar's held in fairly firm. We've seen really pretty tight ranges in Aussie dollar as well today. Obviously testament to the fact that we've not seen any economic data in Australia, China or Japan. And if you look at equity markets, well, China's fairly flat. We've got iron ore largely unchanged, and the ASX is pretty flat as well. But we're seeing some further selling in the banks. I think that's thematic of what we saw in the US as well, where the yield curve, or the difference between 2 and 10-year treasuries, continues to flatten. That premium come down to about 95 basis points. So clearly longer term inflation expectations are falling there. You've seen a situation where in Australia the energy sector is actually down a touch, even though we are seeing oil, both Brent and WTI, pushing up through Asia. That's up about 0.8% at the moment, and obviously everyone's gearing up for next week's OPEC meeting, which poses a fair event risk going forward. So pretty flat day, certainly calmer heads prevailing here. People obviously looking at what's happening in Trump land and saying that impeachment is obviously a very high hurdle, but I think next week's going to be absolutely key, not just because of OPEC, but because I think we're going to have to see a lot on the political side, and that's really going to dominate both in the US and also to a degree in Brazil, where a lot of people, a lot of institutional funds have made their way into Brazil, and they've come under a lot of pressure in all asset classes, credit default swaps, the Brazilian real, and obviously the Brazilian stock market, all getting absolutely smashed. And one suspects there's more to play out in this situation there.